Good morning, everybody. Today is November 18th. It's 9:16 right now, and we're going to be taking a look at some Bitcoin stage analysis. Today is going to be a little bit more interesting. I'm going to be looking at some on-chain analytics as well. Now I know that this channel is called the On-Chain Trader, but I just like to use on-chain to look for some confluence. I don't trade necessarily based on on-chain data. I trade crypto, but I like to use the on-chain analytics just to kind of see what is happening. And that's one of the unique things about crypto that is unlike traditional finance, is that you're able to see some of the you're able to see some really good data of what's actually happening behind the scenes. Things like the short-term holders, how many people are coming in new and selling their coins. What's their cost basis for those short-term holders versus long-term holders? You're able to see a revived supply of coins coming back onto the market. You're able to see ETFs and their impact on the total market. So there's a lot of really interesting information, things like the futures funding rates, liquidation events, things like that. So we're going to be covering some of those things. Again, I want to. A lot of it can feel overwhelming, and there's a lot of noise out there. A lot of people that are trying to time the bottom based on all of these different on-chain metrics. The only, for me, the only way that we are timing the bottom is through price and volume. We're not timing the bottom based on, if a death cross or a golden cross happens. We're not using any of these. We're using timeless indicators that have been proven through hundreds of years, which are moving averages, price action, and the volume. So what is happening? That's all that really matters. And all of the other on-chain analytics, it is interesting. It can provide a wider, more detailed picture, but that's not what we're going to use in order to tell us is the bottom in or is the top in. So everything that we need is right here on the charts. Everything that I'm going to be showing you extra, it's interesting because it paints a picture, and it can also help paint a better picture about the psychology and what is actually happening in the market. So all of that to say, so let's do a little recap quickly of where Bitcoin is currently. So right now, still we are in this stage 4 decline. The long term, what we've been trying to figure out is this a short-term stage 4 decline or a long-term stage 4 decline? So if you've seen some of the other videos, I've already walked through all of this before, but just to kind of show you what I mean by long-term or short-term is this. So here we can see the long-term trend, that long-term moving average, the 200-day. We can see it's been going up. We've been in this long-term uptrend for 1,000 days, give or take. And we've had these specific areas where price has consolidated for extended periods, almost 200 days here, 200 days there, where you were really just getting chopped around, chopped in the slop. And then we have areas like during February to April where the stock market, the S&P, our larger indices, were in a decline, and more like a stage 4 decline. And this was also reflective in the Bitcoin price as well. We were extended because of this breakout that happened during the Trump election, and then we had distribution, and then we went into this decline, and then we had this rally back up, and then this distribution area that happened. And now we are starting to get into this decline again. Now, what everybody's trying to figure out is this a change of trend? Are we going to experience the 200-day flattening and pointing down like we've seen before, like over here? Are we looking at this? Are we looking at a 2020, 2021, 2022 type event? Or is this, people are trying to say, is this just like this, where the long term continues to move up, but we just have that short term downtrend? And how long is that short term downtrend? There's a lot of talk around the 50 to 60K that people are talking about, and if that's the case, well, we'll have to see where the 200-day is pointing at that point. If it's continued to go down, and then we have to look for some stage 1 basing or stage 2. The end of the stage 4, some stage 4B, some late stage 4, or some stage 1 or stage 2 forming, and that's what we're going to be looking for. But that's really what we're trying to identify here. So let's go back to our chart. So where are we from yesterday? Yesterday, what we saw was a losing, a high volume. This was a high volume, as we can see, the volume right there. High volume close at 92,000, 92K. And we can also see that that's a pretty, there's another area of support right here. So we were talking about that 100K support right there, but support is, there are these strong horizontal supports, and we can see here it's testing this support. It's tested the support a lot. That 92 area, it closed right at the 92, and today looks like it cut through that, and that has caused an increase in volume. A lot of people fearful because that 92 was another major support. Because where do we go from here? Well, where the next area is down to that 75K area, this range. So late stage 4 signs, this is what we're looking for. This is the immediate thing that we're looking for. Stocks down 50 to 80%. We are down 27%. Forms a short-term consolidation rather than continuing straight down. It is continuing straight down. Selling has slowed. Selling has not slowed. We've also put in a 52-week low. We can see by the new red dot right here. One was yesterday, one was right here. So things are not slowing down at this point. So that is the update from a stage analysis perspective. Now let's talk about some of the other things that we like to look for in the general market. So we like to look at the SPY. What's happening with the SPY? SPY, it is having quite a bit of distribution. We could see that the pre-market is actually lower, so this is not healthy, which is probably why Bitcoin is also not reacting that well either. We can see some much heavier distribution, volume increasing, different than when we were going on this uptrend. We can actually see the volume increasing, similar to when we had this stage 4 decline back in February that led to the April bottom. You can see the volume really increasing here. We can see the volume really increasing here. Let me change this. There we go. So I have to update my stage analysis for this, but we can see, this right here, October 10. That was not a good day for crypto or stocks or anything, and that was probably a pretty good indicator of that distribution that was starting to occur. And now we're starting to see the chop here. So not looking good there. QQQ, not looking good. Russell 2000, really not looking good here. We have that the 20-day curling down. We have the 50-day flattening. So small cap stocks are not looking good either. VIX, I like to look at the VIX. VIX is still climbing pretty high. Not looking good there either. Crypto macro stuff that I like to look at as well. We're looking at the total 3 ES. It's an interesting one to look at. This is the total market cap excluding Bitcoin and stablecoins. I like to break this down. So this is supposed to show you the altcoin market, but I like to break it down even further because really the total altcoin market, you can break it down by the top 10 versus the everything excluding the top 10. So this is excluding top 10, and then this is the top 10. So we can see right now the total market cap for the small everything less than top 10 is 200 billion right now. See where it's at. This is not looking pretty. We have the 50-day turning below the 200-day, and then for the same with the small caps. So top 10 small caps, it's just not looking pretty. I would say the top 10 is actually looking a bit not as good. Some other things that I think is kind of interesting to look at is where how the sectors are doing. So we can see, we can see like total DeFi, the memes, how memes are doing. So DeFi doing a bit better than memes. Memes are taking a really big hit right now. We can see memes are not looking pretty. I used to have a lot older data, but for some reason, TradingView got rid of that data. It was really helpful, really cool info, but we could see even a 3-touch trend line, a higher low, but it's just been bleeding. Memes have not been doing that well, and this is total meme market. Real world applications not looking good. AI not looking good. We had a little spike here. Things were looking pretty good, but then shoots back down, and then D-pin not looking pretty. So you can also see the ecosystems like Solana, all the Solana coins not looking good. So if you're a trencher, if you're in the pump fund scene, probably not seeing a lot of coins pumping right now. BNB, Polkadot's been, it's just never really been that good. So like to look at those. And then I like to look at some of the other stuff. So this is some things that I pay for. This is the Into the Cryptoverse. Really the only thing that I really like to look at here is, I like to look at two. I like to look at the social, how social, just to see where sentiment is. But I have another indicator that I like to use for that. But this is the 200-day moving average for the top 150 coins. We know that with the stock market, which is something that I forgot to check. For the stock market, we like to look at the MMTH, which is the all the coins above the 200-day, or all the coins. I'm sorry, all the stocks above the 200-day moving average. Above 50 is healthy, and then in between is improving, and then if we get down to the 40, that's unhealthy territory. We can see we went from a healthy stock market to now we've cut below the healthy line. So that doesn't look good. And then you can also look at the MMFI, which is the medium term. That's the 50-day moving average. We could see we had this really sharp recovery, V-shape, and then the distribution. And that's one of the problems when you have these V-shape recoveries that I've been hearing, is that when you have one of these V-shaped recoveries, if you catch it early, looks really good, but when you have such a big pullback, you have a lot of distribution, so it doesn't go through this extended period where it's able to consolidate. It's just people feel high, people feel on top of it, and then it starts to distribute, and now we see the distribution on the decline. So it's just not the healthiest way for stocks or crypto to move is a V-shaped recovery. And I've heard, because I listen to some of the Onchain guys, and they're saying what we want to see is this V-shaped recovery. We want to see a bottom and then a shoot back up. No, you don't want to see that, because when you see that shooting, yes, people might FOMO in, but people FOMOing in is not a healthy. The healthiest that we've seen for Bitcoin, healthiest that we saw for Bitcoin was actually from a long-term downtrend. Would you know it? So you have a long-term downtrend, an extended period, and then you have some healthy legs up and a healthy move up. That's what you want to see. You wouldn't want to see boom and then rip to the high, because then you're just going to get some topping just like that. Because that's what we typically see, is we see, if we see a rip to the bottom and then a V shape up top, I think this is a pretty good example of a rip to the bottom and then a V shape back up and then it rips down. It's just one example, but we see that time and time again where it rips down and then it rips up and then people profit take. So a longer basing and moving and steady climb is much healthier for any asset. I was digressing. So yeah, the 200-day for the top 150, it is not good. We are at 17% of all the top 150 are above the 200-day. So not a lot. Where before, back in that August, after we had that rally, we saw that there was a lot of coins, got up to, the top was around 84% or above the 200-day. Crypto fear and greed, 15. How low can you go? Well, I mean, this seems to be the lowest that it's gotten before. So can it go lower? We shall see. We're testing these indices. It doesn't have the most amount of data, so we just have to see what that's going to do. Another volatility in one that I have here is the BVIV. This one's got a bit more data, I believe. 2022. So, but this one just, I don't know. I'm not a big fan of this. It's maybe it's just not enough data. It's just very volatile. It's a volatility index that's pretty volatile, but I like the fear and greed. It just kind of feels a lot cleaner. I like to look at the top coins, top 100 over the past 24 hours. So the top 100 coins, and how they're doing and how they're not doing. Zcash pulling back, ICP up 10%, not great. Then I like to look at the top 500 and see that top 500 coins, not doing that great either. 24% for some crap coin, poopy coin, and then wrecked down 28%. So, but I think not seeing some crazy top. I mean, 28% is not. Wouldn't want to lose 28%, but when we look at the top 10, all the alts. I need to come up with a name for this. It's like pure alts or small cap alts, small caps. When we look at the small cap alts, we had this capitulation event that happened October 10. That was huge. Oh man, a lot of people got wrecked, and I'll be showing some of the on-chain stuff for that, but just not. It's not. It's actually been holding relatively steady. I mean, yes, we are kind of at this bottoming area right here. We're at this kind of bottoming area right here. But held relatively steady. The top 10 is a bit worse. But again, not like what we're seeing with Bitcoin. Bitcoin is definitely getting hit a bit harder. All right, so now we're gonna look at some of the on-chain stuff. This will be interesting. So, excuse maybe some of my fumbling around this. I'm not an expert in on-chain. I am much less educated on the on-chain, but I'm starting to learn. I'm starting to incorporate it, trying to understand I'm paying for some premium subscriptions to get some of this data and hearing them discuss it so I can start to try to understand it. But there's some charts that I like to look at that stand out to me and how we might be able to look at it from a like a professional trader perspective. Some Bitcoin spot volume. I just like to see, is there more volume coming in? We could see in December, for example, December of 24, heavy volume was really coming in, and it came in quick and hot. You could see here, it was like a couple days, and it just went through the roof, and then it sustained that, but then it started to die down. We had that July, and this is why we were saying during that, I believe it was July 10, there was a breakout that happened with Bitcoin. The July 10 breakout, or July 9. I think that's the July 9, July 10 breakout. We could see here, where we had that contraction that happened. It got really tight here, and then it broke out July 10. But when we looked at the on-chain, for that, it really wasn't that meaningful. So it was kind of like a weak breakout. And if we just kind of zoom in here, July 10, yeah, July 10. So, it spiked up a little bit. It went up a bit more. September, it started to pick up a bit. October, but then we have October 10. We have October 10, and then that's where we dropped. So, which is also kind of interesting because the spot volume increased the most on October 10, and that's also where the sell went. Looking at the ETF flows, we could see ETFs. I think this is kind of cool because you can see what price is doing in relation to the ETF outflows. And we could see here October 5th, ETFs were, it was a pretty high inflow. And then October 10 happens, and again, high inflow. We look at the next week, and high outflows. So I don't know. I think it's kind of peculiar that ETFs were flowing in and then on October 10 is when we have this giant liquidation event. So to me, that seems like there was it was an unraveling, and we can also kind of see that when we get to the degens area. But let me kind of keep going. Aggregate volume. I think this is pretty interesting because you can just see how big of the market is just based on futures. So based on the speculative future market. It's a very degen. This has become less spot focused, more degenerate focused, which I think is kind of interesting. As it's becoming more institutionalized, it's also becoming more degenerate. Key cost basis. Fear has no floor, greed has no resistance. Fear has no support. Fear knows no support, greed knows no resistance. And but what this pricing model is supposed to do is it's supposed to tell you the short-term holder cost basis. So all the people that have been holding for, I believe, around 6 months, that's the short term. We could see their short-term cost basis is around the 110. So the people that were coming in, they're buying, and their cost basis is around 110. And right now we're here, so people are underwater. And the true mean, which I need to get refreshed on what the true mean is. It's showing that it's 82, so that's an area that some of the on-chain people are looking at as an area of support, which I also kind of interesting because when we do look at some of the degen stuff, and maybe I'll just show this now since I've referenced it quite a bit. Perpetual futures funding rate. So this is how much people are paying in interest, basically, for futures. So how much are they willing to pay to go long? And we could see the funding rate is increasing as the price is decreasing. The liquidations. This one's really, really interesting to look at. We could see the number of liquidations. Here's your October 10th right there. That October 7, October 7, it looks like that's when it started to unravel. October 8. Um, let's just do last 3 months. Yeah, October 9 is when it started to unravel. It looks like we have our October 10. Looks like that's a 1 week period. But yeah, all during this time there was a complete unraveling. You can see liquidations is through the roof. Where's the price even go up to? It goes up to over $1 billion. How much in liquidations was this? So 2.3 billion. $2.3 billion in liquidations happened on a single day. Monumental. And that was the start of the unraveling, or our stage 4 decline. This one, the heat map, what it's showing is basically that this is an area where there is leverage, and down here that 80K is where if people are, if price continues to drop, because this is longs, so these are all longs. If price continues to drop, it's going to continue to liquidate all of these people. Like we could see, like at the October 10, it just, we had all these longs just got liquidated, and then it was cascade, and it just went straight down. And like we showed over here, the futures liquidations straight down. We didn't see it as heavy in Bitcoin. Yeah, I mean we saw a good amount. It definitely took a top there. But where we really saw the biggest impact was alts. Man, alts just got wrecked. We saw alts going down to prices that they haven't ever been in a single day. So this was really just degen futures speculation that were getting liquidated left and right. So it was a rough day. Luckily, I was cash. So and yeah, liquidation volume. We could see the volume, and then there's that heat map. So I included on my chart just to kind of give me a kind of paint a picture for me, is that this is a liquidation area. This is an area that I kind of want to pay attention to, because we could see another type of cascade effect like we did on October 10. Because if price continues to drop, how much can this drop? Well, if we look at the volume, and we can see the market, October 10, the futures definitely dropped, but then everybody came back in. All the bottom fishers came back in, and then they said, let's drive back up the price. We just got liquidated, but yeah, they just got liquidated, but we want to catch the bottom, catch a falling knife. And they shot the futures volume back up. So, if price continues to drop, we could see it just continue on the downside. People just everybody just wants to catch a falling knife. It's not what we want to see. So I'm taking note of that. Again, I'm not trading around it, but it's just something to pay attention to as we're watching the stages unfold. So yeah, that's where I kind of went off with that. True mean. Short-term holder, MVRV. So this is the this is another indicator that they like to look at. This is the Z-Wave score version. So people are saying that, oh, this is the bottom because we're getting down to that -1. And if we go below -1, if we go any lower than this, then the floor, they're basically saying that this is the line that needs to hold for the bulls. If it doesn't have a V-shaped type bounce like it's had previously, like in the April and back in July of 24, April, that was that V-shaped recovery. They're saying that if it doesn't do that bounce right here, then it's only down from here, and that's the indicator of the bear market. We know that that's not how you indicate a stage 4 decline, but that's what some people are saying. So again, this is just the yeah, a lot of information. It overwhelms me also. So again, I'm just a student. I'm just trying to share some things as I'm learning them. I thought this one was kind of interesting because it's the realized profit and loss. So uh, again, no clue. I guess maybe it's that short term, long term holder, and then they're just showing the realized. I don't know how they come up with this information, but we could see what I think is pretty interesting is the realized profit is dropping while the realized losses is increasing, and we're starting to come up with this like equilibrium. Um, so if we look at the full history, yeah, we could see that back in 2022, losses were through the roof. Losses were through the roof. Um, and there comes a point of this equilibrium, or where it flips and realized losses overtakes, and realized losses overtakes, realized loss overtakes, and then this is where we started that bull, that stage 2 uptrend, the long term one, and just another thing to take into consideration. So all this stuff I get from this guy James Check Onchain. If you like the on-chain analytics, again, it's just more of a confluence. I'm paying for it because I think that it's interesting to maybe learn and see maybe if there's a way to incorporate it, since I really enjoy the crypto space. I thought maybe I could find some edge in there. Don't know if I've really found that edge outside of just the things that we do, which is stage analysis, and risk management. Learning how to trade like a professional instead of a gambler. So TBD, to be determined on how I feel about that. But so that was kind of a longer, long-winded way to be able to share some of the things that I'm learning, some things that I've seen on what's happening in the market right now. So yeah, that's about it.